Signs of economic weakness are everywhere, except to those who are undeniably unconscious. The Fed has risen rates a minuscule amount after constant promises to increase it at every meeting, citing these weaknesses publicly. Oil has found its way down to financial crisis levels, with fears it could drop drastically lower, causing a major shockwave throughout the system. With no major country performing particularly well right now, the Fed temporarily increasing interest rates, and the constant build-up to the impending global economic collapse. How can there be any reversal in this pattern? You came here for the truth, so let me unveil that for you. Today we're going to look at the stocks are crashing right now. Many will say that's not the case. I, however, beg to differ. We're going to talk about oil. We're going to talk about the Fed. Let's get into it right away. U.S. stocks closed sharply lower Friday as investors weighed low oil and economic data in the aftermath of the Federal Reserve's rate hike on Wednesday. So what we have is obviously the oil going to financial crisis levels. So this is a dramatically lower level than where we are a few years ago. With Friday's late afternoon decline in stocks, the major U.S. averages wiped out gains for the week. And you have to remember, there's been really no gains for the entire year. In the context of the Fed, we're removed some uncertainty. There's still some uncertainty about earnings going forward, and you're experiencing that with some volatility in the market pricing. That's what they'll call it all the time. But truthfully, when you factor in inflation, look at the stock markets in the US in the year 2000, let's say, and then you compare them to today. Now, while nominally they have risen, if you look at the actual real scenario, when you factor in inflation, you know specifically that they're not doing any better. And here we are now, coming on 16 years later. Let's move on to this. This is out of USA Today, and they're talking about oil. It's an emotional asset. In the short run, the decline in prices whacks jobs in the energy industry, cutting economic growth there. But in the long run, spurs economic growth as people spend their money in other ways. But where we saw the peak a few years ago in oil, and a dramatic decline has occurred ever since, the job situation hasn't gotten any better. There hasn't been any economic growth. There has only been this stimulus that comes from central banks. So I believe that this is wrong. Falling oil prices should be beneficial to the U.S. economy. It's a benefit to the U.S. economy. That's the negative. The positive is Americans have more money to spend on all kinds of stuff. If you read a classic economics textbook, it explains in this way: the cheaper a commodity gets, then people eventually will hop on the bandwagon and get into it, whether for investment or perhaps they'll use it because it's cheap. Now, oil is one of those which I believe is, at this time, essential to having the machine continue to run. They need oil. Whatever price they're willing to pay, that's what I believe, and they'll simply pass on the increased prices to the consumers, to the customers. So if oil is very expensive, you don't have your local gas station that basically keeps the prices where they are and they cut from their profits. No, they just increase the prices. That's the way this works. But now they're trying to mess around with this, and I quite frankly don't agree. Let's move on to this. As we see Peter Schiff, gold is still going to $5,000. Now, I like the way that CNBC highlighted just this one little sentence that he stated when he was talking about the Federal Reserve and their decision. What I would like to highlight from his quick little interview here is that he was talking about the Federal Reserve. They consistently said every meeting they had throughout 2015, we're going to raise the rates, we're going to raise the rates, we're going to raise the rates. And they never did. So they had to do this at the absolute last meeting that they had, and they did it to the minimum amount. Now, what he mentions in here, which I do agree with, is it's a range. Previously, the range was 0 to 0.25. Now it's 0.25 to 0.5. So technically, they don't even have to really raise rates much at all. They can keep it at the floor of 0.25, and that's basically going to have literally no effect whatsoever. So interesting what he talked about there. Global liquidity, and this is year over year, shrinking. 2015. Liquidity is what keeps this system afloat. I don't like it, but that's just the way it is. You need basically money as a current to change hands. It needs to continuously move. If it sits in the bank vaults, it's not doing any good to anyone except maybe the saver, but in terms of the whole central bank business, it's not doing any good, and that's what's happening right now. People are not really willing to spend the money. Businesses are not really investing, except for the few who are making their trillions. And we'll have to see where it all goes. This is from my book where I'm talking about inflation. The true definition of inflation is the increase in the monetary supply. The money supply increases when a central bank prints money to buy bonds, give to other foreign central banks, give to commercial banks, and bailing out failed companies. The higher these charts go, the less value your money has. So I'm talking about this, give you a little example. If diamonds could be found anywhere, just like any other rock, how valuable would they be? It's really comes down to the less of something there is, the more it is worth. And, there are variances here with this, but just go with me for a moment here as we look at this. Now, if you think about the dollars that are being printed, think about your money, how it's been worth ever since you've been around, the last 10 years, 20 years, 50 years, whatever it is. Think about the value of money and how it is declining. Their system that they've set up, the Federal Reserve, for example, in the US, it's not doing us any favors. They continuously make decisions at these meetings where the politicians go ahead and meet together to sign this and that bill. I haven't seen many throughout the course of history that are actually beneficial to the citizens. Very, very few are ever beneficial. You're better off voting no on all of them. Saudi Arabia CDS, rising default risk. We're looking at this, just an example, in Saudi Arabia, but we can see the portion that I want to highlight is the CDS, credit default swap. When you think credit default swap or CDS, I want you to think Greece. That's really the linchpin that brought them down. See, you can actually purchase this, let's call it a derivative, and use it as a financial weapon of mass destruction, as you know who once said. This is just Saudi Arabia, but these CDSs are all around, and they are in fact a good indicator, but at the same time could be used in a very hurtful way. Credit spreads and buybacks, leveraged buybacks punished. All I'm trying to note from this is that we have an excessive amount of leverage in the system. But when that declines, you have to realize that because it's leveraged, let's say $1 to $10, you're pulling a lot of money with you. Where's that money going? Because it's not necessarily destroyed, it just changes hands. Are they pulling money out of oil and they're putting it into other assets? Let's keep our eyes peeled. And then right here, last but not least, Amazon.com is negotiating to lease 20 Boeing 767 jets for its own air delivery service cargo industry, executives had told the Seattle Times. So we have Amazon.com, a big retailer, now getting into the shipping industry. Very interesting. Now, you've heard about the drones, and you've heard about other schemes that other corporations have had about delivery services, but this one seems to be major. The online retail giant wants to build out its own cargo operations to avoid delays from carriers such as UPS, which have struggled to keep up with the rapid growth of e-commerce. What I want to note from this article is simply the fact that corporations are getting bigger and bigger. Now think about this. We had the traditional services like UPS and Purelator and FedEx and everyone else, and they were offering jobs to people. They were obviously providing a good service. But now you have these major corporations which are simply wiping out all of the competition. This is just one example. But when you have these major corporations, which, if it was all free market and this is just the way it is, I would totally be for it. I'm very in favor of the free market. And to some degree, this is part of the free market. Things like this happen. But what I do see a lot of is the heads of these corporations meeting with the heads of governments, those who create policies which then favor these major corporations. And then they accidentally fall into the bed with each other. That's what worries me. If you found this video informative, please give me a thumbs up. And I also want to mention that if you're interested in checking out my book, The Money GPS, if you go over to Amazon, they have a look inside feature, which allows you to flip through the pages of the book and see if you like it. Last but not least, I just wanted to mention the fact that I saw all your comments from the past few days, get well soon comments, and I really do appreciate that very much. Thank you all.